Good day, everyone. We have yet another update on the crypto legislation coming out through Congress, and it's still trying to slap itself into something that looks like law. Now, I know what you're asking. What on earth is the Digital Commodity Intermediaries Act? Let me explain to you the difference between that and the Clarity Act so we can go over the winners and the losers from this update on this bill. So the Clarity Act that's being debated right now, that refers to the Digital Assets Market Clarity Act of 2025, which is a House origin bill that's using the short title Clarity Act, and the Senate banking leadership has been pushing the Senate side work around the Clarity title, so all of their public memos and their fact sheets have been reported under that name. And we know through recent reporting that this Clarity Act has hit some turbulence and has gotten delayed. Brian Armstrong has been at the front of this controversy. So now what's new? As of today, the Senate Agriculture Committee, they released their own updated market structure text titled the Digital Commodity Intermediaries Act. So this updated draft literally just came out. I crawled through 160 pages and compared it to the December version to see who the winners and losers are. And spoiler alert, there is some not good news, especially if you like self-custody Bitcoin. If you remember, there were some provisions that protected self-custody in the proposed December draft. Now this version avoids all mentions of self-custody, but we're going to get into it. But first, I wanted to explain the difference between the two committees and what they own in terms of the market structure. The Banking Committee tends to own the SEC and the securities-heavy portions, and then Agriculture owns the CFTC and the commodity portions. So this update on the commodity side just got released. Let's dig into it before it's scheduled to be marked up on January 27th. So first things first, the Senate quietly invented a don't ask, don't register yet policy for the entire crypto exchange ecosystem. It's very interesting. The bill is pretty much dropping this regulatory speedrun patch for the exchanges. It's essentially this clever little mechanism that says you don't need to be fully compliant yet, just act like you might be someday. They're calling it expedited registration with provisional status, which is basically the legal version of putting on a suit jacket over your pajamas before a Zoom deposition. So here's how it works. The CFTC now has 180 days to create an expedited registration process. That is a ticking clock. Now, if you do the math, once the bill gets passed, the CFTC would have within half of a year from the bill passing date to start acting to create that expedited registration process. So essentially, then you have 90 days after that to either register or start sweating. So once you enter the process, that's when you get provisional status, meaning that you're actually allowed to operate in a state of regulatory quantum superposition. You are observed, but you are unpunished. You know what you have to do if you're a crypto exchange? You literally have to slap that we are not officially regulated. You have to slap that sticker on your homepage and try not to rug pull anybody while the grown-ups finish writing the rule book. Now, this is the first compliance ramp that we have actually seen with teeth, some timelines, and a little bit of forgiveness baked in. This is precedent. Now, it doesn't solve everything necessarily, but it is giving the real players out there a way to step inside the regime without dying of paperwork toxicity. So the regulatory vacuum is really starting to get filled with some procedure, and procedure is all the CFTC really needs to start gatekeeping liquidity like it's 2008 and Bear Stearns just exploded. This is the first bridge from chaos to a bit of a supervised market built on some actual deadlines. Now, this is the update where all the Bitcoin maximalists, such as myself, we feel a bit slighted. We know that we've never needed legislation in the entire history of Bitcoin. Of course, Bitcoin doesn't need the government. But I am just saying the earlier draft of this bill literally had a very clear sentence that said, in plain English, that you can legally hold your own assets, hardware wallet, software wallet, peer-to-peer, keys in your pocket, keys in your head. Congratulations, you are an adult. And that language existed. It was explicit, it was statutory, it was the shield that you could point to in court and say that Congress already decided this. And now we're opening the January 2026 update of this bill, And I'm looking for the self-custody language, and it's totally gone. There's no press release about it, no dramatic floor speech happening here, no headlines screaming about wallets, just a clean deletion of the text. You know, like a surgeon removing an organ from you and just telling you to rest up. And this matters because the law is not poetry. If it's not written, it's not protected. Without that clause, self-custody of Bitcoin still lives in that gray zone of agency interpretation, future amendments, and whatever the mood in Washington that year feels hostile and charitable. So this bill so far, it's not banning self-custody, that's not the move, but this move is a bit more subtle. The move was to stop affirmatively protecting it, to remove that clean statutory shield that advocates loved and the regulators hated, to turn a right into a future argument. Now, politically, this could be seen as a price of momentum, because if you're a politician, you want a bill that moves, so you gotta shave off the parts that make some of the room that you're catering to nervous, and self-custody unfortunately does that. Self-custody reminds people that Bitcoin works without permission, without intermediaries, and without the politicians' consent. So instead of fighting that war here, they postponed it. They're going to kick it into future bills as of now, future amendments, future lawsuits, and probably future administrations. So in my opinion, this is the quiet deletion that will trigger the loudest fight if this holds into markup. So now we enter the part of the bill where the drafters are trying to make peace with the fact that Ethereum exists. I still have not made peace with that, but we did see that the old draft literally treated DeFi like it was a radioactive leak. Every single mention of DeFi in that version of the bill, it was coming with brackets, footnotes, or a desperate cry for public comment. It literally had a section that said, seeking further feedback. That's Washington speak for, we don't know what to do with this, but we're scared that if we ignore it, someone in a hoodie is going to overthrow the Fed. But in this version, they actually did something. Section 207 introduces the Software Developer Protections Clause. And while that might sound like a middle school anti-bullying campaign, it's actually a very carefully worded legal moat designed to protect builders from getting sniped by the CFTC. Now, it says you're not suddenly a registered intermediary just because you publish smart contracts, or you run a DeFi messaging protocol, or you contribute to a liquidity pool in a spot market. The key term there is spot. They are drawing a very hard line. If you are running code that touches futures or custody, you're back in the compliance kill box. But if you're just building or participating in peer-to-peer rails without holding customer funds, you do have a legal shield. This is the government essentially saying that we still don't fully understand DeFi, but we understand that we can't kill open source code without triggering a First Amendment lawsuit, as well as a GitHub rebellion. The protections are real, but they are narrow. Do not mistake this for blanket immunity. This isn't code is law. It's more like code isn't illegal yet. So in this updated version of the bill, DeFi does get a lane, but the lane is very narrow and defined. Now, you're also going to notice some additional things missing in this bill, specifically entire categories of regulation that were present in the last draft. They have mysteriously vanished like liquidity in a 3AC portfolio. Let's start with AML, something called anti-money laundering. The earlier draft had a placeholder for this, clearly marked to be supplied. Well, they did not supply anything. The AML section is just gone like it never existed. Next, you have commodity pool operators, which are CPOs and commodity trading advisors, CTAs. These are the entities that manage digital asset funds or give investment advice. The old draft had a full section addressing how they would register under this new framework, and that section has also been surgically removed. What does that tell us? It tells us that the Senate Agriculture Committee made a very conscious decision to narrow the battlefield, to stop trying to solve everything about crypto structure in one go, and instead focus on a manageable sliver: the spot markets, exchanges, brokers, and DeFi builders. AML, that's a problem for another committee, probably Senate banking. CPOs and CTAs, that's probably shunted off to the next legislative vehicle or left in regulatory purgatory for the next 5 to 10 years. This is a tactical retreat. It's kind of a way to reduce friction and get the core bill past markup without letting it collapse under the weight of every single unsolved crypto policy war at once. Sometimes you have to cut the extras to get the core across the finish line, and that's what seems to be the strategy here. So let's close with the scoreboard. What does this mean? Who are the winners? What are the losers? What does it mean for Bitcoin? The winners first, the big exchanges, massive win. They now have clock-driven on-ramps into the CFTC registration with provisional status. That means that they can go legit without waiting 3 straight years and $20 million in legal fees. That is regulatory safe mode. The institutions are also winning. This bill clarifies who regulates what and makes it easier to trade Bitcoin like it's soybeans, boring, legal, and liquid. And builders as well, especially in DeFi, they now have a safe harbor. It is narrow, but it is real. You can build, you can publish, you can contribute to protocols without getting flashbanged by enforcement. Now the losers, obviously the self-custody advocates, and that is a big one because it's kind of the biggest selling point about Bitcoin itself. We know that we can hold it without the government's approval, but still. The regulatory maximalists out there who wanted the AML stuff baked into the bill, obviously the Senate totally redlined their wish list. And any offshore shadow exchanges, well, the bill is kind of aimed right at their neck with a working compliance ramp right now. The United States is literally just telling the market participants, if you stay outside, it is because you're hiding something. So what does this mean for Bitcoin? It means the US government just basically semi-officially blessed Bitcoin as a digital commodity, and it is building a structure to supervise its trade without SEC interference. It means that institutional demand now has a pathway. You are going to see more custody integrations, more exchange infrastructure, more derivative layering, and fewer excuses. This bill undeniably is a compliance green light for Bitcoin infrastructure, at least. It doesn't fix the world, but it does start the process of putting Bitcoin at the center of a regulated state-accepted market. It's not full adoption, but this is a beachhead. And once the state does build the pipes, we have seen a lot of major players in the industry say they just want regulatory clarity, and perhaps this is what will cause liquidity to flow. So at the end of the day, Bitcoin did get a legal on-ramp built by its former enemies, and they did it to survive the system that it was designed to replace. And that is poetically beautiful. My name is Adam Livingston. I am the Bitcoin Wizard. If you enjoyed this content, please like this video and subscribe to Swan, where we bring you the daily Bitcoin insights during the greatest wealth transfer in the history of humanity. We are bullish on Bitcoin forever here at Swan. It is Bitcoin, not crypto, Bitcoin only, and we are so happy to have you here with us every single step of the way. Have a terrific day. Do not party too hard. Class dismissed.